Good morning. This is Kelly Yacovelli, managing broker for Homes of Idaho. And I'm coming to you today just to share some information regarding the coronavirus, recession. Is this 2008? I am getting a lot of calls and a lot of questions from clients and people, and just thought I'd come and just share some information because I know that right now there is a lot of fear out there. When we have events like this, it does strike fear. It moves us to our right brain, which is where our anxiety and our stress and tension is, and we don't think logically because we haven't moved to the left brain yet. So I thought I'd bring some information, some numbers, some statistics that hopefully will help you during this time. Because I know right now, because of what's going on in our country, that people automatically think about 2008. So let's just start there. So let's take the last six recessions that we've had. Three out of the six recessions, we actually had appreciation in our real estate. In 91, we had a little bit of a depreciation, just a small dip. But in 2008, we had the crash. And of course, that's what everybody remembers. So why is what we're going through now different than the crash in 2008? And so let's talk about that. 2008 was a financial system crash. What we're dealing with right now is an event. It's more like the dot-com crash or 911, and the way that it feels and all that is more like that event. It happens. It slowed us down. You know, if you remember 911, people avoided crowds. They were afraid that it was going to happen again. We had social distancing, but we just didn't have that terminology yet. And so that's more what this is like. So let's kind of look at that. In 2000, and so one of the things that people are asking me about what's going to happen with my equity, and you know, are we going to see prices drop, and you know what, nobody has a crystal ball, and this information I've gotten it from people that are the experts in the industry, and so I'm just going to share part of that. So what's different in the housing market today versus 2008? So let's look at 2008. Well, in 2008, we had rising prices, and we had people taking out equity, and they were taking out their equity, maxing out their equity for things like boats and you know, exotic vacations and things like that. And in fact, in 2008, there was $824 billion in equity taken out. And then, so let's compare that to now. So now we have 300, in 2019, there was $324 billion in equity taken out. But let's look at what's going on. In 2008, they maxed it out. Then we had the financial crisis and the crash, and they did not have the equity, and they lost all their equity on the home because they didn't have it to start with. So when we look at today, 37% of homeowners have no mortgage. So, you know, we don't have to worry about that. Then when you look at the other 63% of that, the numbers actually come out to 50% of the people who own their home have more than 50% equity. So even if we have a dip, and right now people aren't predicting, you know, a huge price depreciation, it really is going to depend on this, how long this pandemic lasts. But even if we do have a slight dip in appreciation, our housing market can handle that because, again, over 50% have 50% equity in their home. So that is one of the factors that is a huge difference than in 2008. And so are we in a recession? Are we going to go into a recession? Well, it depends on who you ask. It really does depend on how long this pandemic lasts. You know, if it lasts 30 to 60 days, I think they're saying that it's just going to be a blip on the map, and then things will go back to normal. And however, if it lasts 6 months or 9 months, then we are going to see some a greater effect on that. And we don't know what that is. Fortunately, we have some great scientists working, and I think the country and the government's doing everything that they can. And I think people, in most part, are cooperating with their social distancing and working from home, and companies are working from home and sending their people to work from home, which is awesome. And I got somebody here. I have to put my glasses on. Sorry. So true. Somebody said we buy things we don't need. Yeah, with money we don't have. And that's true. However, when we look at the statistics of what's been going on now, we have most homeowners have learned their lesson, and I'll talk a little bit more about that too, and why that makes a difference. So Goldman Sachs is saying that due to the layoffs and the job losses, that right now we are in a recession. We have others that are saying that we may be going into a recession. So I guess it just depends on who you ask. And but let's look at that compared to where we were in 2008. So Wells Fargo does not predict that we are going to have another 2008 because this is an external event. It is not a financial crash. So that's a totally different thing. Again, going back to the dot-com crash in 9/11, there was a season. There was a season that life was different and we did things differently, and then we went back to normal. We went back to taking vacations and having our social events and all of that. And that's what will happen here. That's what's being predicted. In fact, Goldman Sachs has predicted that the third and fourth quarter of this year will be strong, and moving into the 2021 will also be strong. So that's good news. Again, nobody knows how long this is going to last. In 2008, it was like a 5-year recovery. That's not going to happen here because, again, this is an external event, and we're talking months instead of years for recovery. So another factor of what's going on now versus 2008 is in 2008, the government was very slow to act. In fact, they were too late in it. You had banks who wouldn't do short sales and wouldn't cooperate with homeowners or anything like that until way into the downturn, until it was too late. We're seeing something completely different here. We see where our government, our federal and state, they learned their lesson too. And so we have the stimuli package that is going to be helping displaced workers right now, and with extended unemployment, with extra unemployment benefits, and so those types of things. We have small businesses that will have help to be able to keep their employees employed. Those kinds of things, extending unemployment and all of that. So that's one of the things. Another thing that is important, because people are thinking, I have investors saying, oh, I'm just going to wait till the crash and then I'm going to go out and buy all these properties, going back to 2008, because that's what they did, right? Well, again, what's happening here is that federally backed loans, there's a moratorium on evictions, and there's a moratorium on foreclosures, so for at least 60 days and could be more. And so that's another way that people are being helped. We're not going to be seeing the foreclosures that we saw in 2008, and there's going to be forbearances and things like that that's going to help when the time comes. Another factor is that when we look at 2008 and you look at the debt ratio that people had and how much of their housing was part of what they were paying towards, or what percentage they were paying towards their mortgage, well, at that time, it was over about 21%, and now it's more like 12% on average. So, if you have a spouse that lost a job or whatever, most likely they can still afford to pay their mortgage payments. So people got smarter too. I have clients all the time that are approved for much more home than they buy, because they either learned their lesson themselves or they watched their parents, lose a home or go through the 2008 and thinking, I don't want to be like that. So they keep their payment more affordable in a more comfortable place. And so that's another way that we've learned our lesson. So a couple of things to think about is why this is different than 2008. Just to recap, is people have learned their lessons, so they're not mortgaging their homes to help. They're not taking all their equity out. The government, federal and state, have stepped in and they're doing what they can, and the amount of money that people are paying, and people are smarter. They're not buying homes that they can't afford. So what does that mean here? So let's just talk about locally here. So I just kind of did a little bit of stats. And so on Friday, I looked and there was 146 new listings that came on, and 74 went pending on Friday. So, and I hear from my agents all the time, they're online saying, I was like 5 or 6 in line waiting to get into this new listing. So homes are selling here, and people still need to buy. Now, there are going to be people who are going to wait, and they're just going to pause and just kind of wait a while, and that's great, and we're going to support them in that. But there's also those people who need to sell. They have to sell. And so we're going to accommodate that, or they have to buy. So we are doing things like a lot of virtual tours, or just videotapes, and sending it to them, and letting them see the homes that way. And then before they move to here, they're not flying in to come see homes. And so we help them in that way. So I'm not quite sure what that was. So that was kind of funny. However, we have seen in that median price, like the 250 to 350, where we are seeing some prices come down. Not all of them, a small percentage of them. And my guess, and it's just a guess, is that those are people who really need to sell. And so they want to get their home moved and do whatever they need to do. Maybe they're already in escrow in another home, or they're moving for a job, and all of that. So that's what we want to do. And so what's going to happen here? Well, we don't know. We really don't. Again, it depends on how long this pandemic lasts. If it's a 30 to 60 days, then again, it will be a blip, and we're not going to see much happen that different than what's happening in the market right now. Our interest rates had gone down, and then they went back up a little bit, and basically it's just because it's a volatile market and they just don't know what's going to happen. So predictions are that once this settles down and kind of levels out, we're going to see the interest rates come back down again. But they're still, 3.6, 3.7. That's a great interest rate if you look at the average, 6% that we had before 2008. And I remember when I had a loan for 18%, and I thought I was really excited because I'd gone from 21 to 18. So it's all relative there. But so we are here. We're helping our sellers. We're helping our buyers in any way we can, just keeping them informed. We are contacting everybody. We want to make sure everybody's safe and they have all their needs met, and that if there's anything else, and not just real estate, of course, that we want to be there and help them. Homes of Idaho has a lot of great resources. We want to be there for them too. And I have some comments here, so I'm going to read them, and so I can see if I need to answer something. Awesome. Okay, great. And so if it does last, though, what we could see, we could see some prices coming down, basically because we won't have the comps, and so appraisers will have to go off and they'll have to adjust. And however, once we're through this, we're going to bounce back quickly. It's not 2008. We're Americans, and we're going to continue. We're going to go right back to what we were doing. I know we're going to be going to dinners, and we're going to be taking our vacations, and we're going to go see our family and all of that once the stay has been lifted and we are able to do what we enjoy doing most. But in the meantime, I just want to say be safe, use wisdom, do not walk in fear, and move to that left brain. Don't follow the media. You're going to get a lot of garbage. They get paid a lot of money for the sensational headlines. So let's not do that. And please let us know if there's anything that we can do to help you. You can always reach me on my cell, which is 208-608 2791. And I hope to talk with you and meet with you. And I will be back with more information at a later date. And have an amazing day.